you've mentioned the big US names here. For Australian investors sitting at home or in the car listening to this, and they're thinking, I don't invest abroad, I don't have that exposure. I would imagine that you would say that the home country buyers, if you like, they're going to miss out over the next decade or longer.
Look, I don't want to overly talk our own book. Obviously, I've got a
sure.
slight conflict of interest, but I think the simple math of is, the Australian market represents less than 2% of the world's market capitalisation, and therefore if you've got 70% of your money in Australian equities, but it's only 2% of the opportunity that's available there in the world, you tend to have a home market bias, and people typically get home market biases wherever they are. It's extreme in the case of Australia. Obviously, there can be benefits with our taxation system of the franking credits you get out. So there are the franking credit equation that you get out. You don't get double taxation on ownership of Australian equities, where if you own some equities in France or the UK or the United States, you would on the dividends maybe get, not on the capital gains, but on the dividends as an element of double taxation there. But if you really think about what's going on in the world and you want to invest in areas of structural growth, where are the areas? The banking system, I've just said, I'm not interested in the bank. The retailers, most of the retailers, there's probably only traditional retailers, there may be only 4 structurally advantaged retailers left in the world. And they ain't in Australia.
Could you name some of them? Or?
I would say Costco has a structurally advantaged retailing model. Maybe Inditex, who owns the Zara business, maybe have a structurally advantaged retailing business. Walmart, I think the jury's out whether they have the capability to effectively take on Amazon or not in the world. A lot of the traditional retail models are structurally really challenged about what Amazon's doing to the world, and the physical nature of the real estate burdens that they have. Whole paradigms are being shifted. So then you say retailing's not that attractive. We have a large commodity sector in Australia. I'm not huge fans of commodities, but that's it. But where are the payments franchises? Where are the cloud computing businesses in Australia? Where are the access to the non-commodity side of China? I guess we've got A2 Milk or something, but where are the luxury companies that you could participate? What is going on at the upper middle class and the prestige side of the Chinese market is growing at 30% a year at the moment, and it's by far and away one of the large structural plays that's happening in the world. We obviously own Starbucks, and we may own some other things now that's playing into that. It's just, when you look what's going on in the world at the moment, there are very, very few players in Australia that are listed that you can participate in that, and they're kind of playing out in the old economy, and much of this old economy is being hollowed out.
Yeah, I've heard you say that before.
Yeah, I think I've said before that the centre of the market risks being hollowed out, and I think it's true. I really think the disruption that's coming is hollowing out those traditional businesses in many stock markets in the world, and I think Australia really looks like that to me. But there are some good companies here as well. So I don't want to say there aren't good companies. It's just the game's got harder, and there's fewer choices here, and the game's got harder for all of us.
And if you're picking your best 25,
it's just I've got a larger menu to select from as that world starts to get hollowed out.